Thank you, Victor, and good morning, ladies and gentlemen. It's time to talk about our future. So let's jump straight into the specifics of our transformation journey. Now, moving forward, our new approach is to build new, sustainable value streams to grow our income and reduce our carbon intensity over time. By 2028, with the ramp up of our international chemical business, here we're not starting from scratch. So as this business ramps up, our dependence on coal would reduce the group's dependence by less than half of our EBITDA. But we can't stand still. As markets and customers are evolving, we will have to be ready to move as the demand for lower carbon products grows. Let's put the slide up, please. Thanks. And here, Sasol's real advantage is our fully integrated value chain. Our fuel and chemical plants give us a significant guaranteed offtake for any sustainable feedstock that we introduce. Now, that anchor demand lets us bolt on renewable energy and sustainable carbon streams, earning returns from day one. So, in effect, new, sustainable businesses grow on the core of the existing businesses instead of risky greenfields projects. And this allows us to scale and expand beyond our own consumption, all with far lower risk than our peers. Now, importantly, as an investor, we're doing this with realism. No moonshots, no speculative bets. Each initiative is grounded in technical feasibility, matches market maturity, and delivers attractive returns. Our optimized emission reduction roadmap is the clearest proof that Sasol can reduce carbon intensity while growing value. Today, we're still achieving our target, but under vastly better operating and financial conditions. Now, I'm sure you must be asking, how is this possible, right? 3 shifts unlock this breakthrough. Firstly, regulatory certainty. In 2024, the Environmental Minister confirmed load-based sulfur dioxide limits for our boilers. So this allows us to keep more boilers running, preserving steam capacity while meeting compliance requirements. So this means we are no longer cutting back on gasifiers and will maximize Secunda's production. This also allows us to reduce our capex by more than 70% by moving away from recycling fine coal and progressing alternative solutions. Next, we've expanded our renewable energy ambition to more than 2 gigawatts, displacing expensive coal-based electricity and generating competitive returns. And finally, to bridge the gap to our target, we'll leverage carbon offsets and renewable energy certificates. Now, Sasol has long purchased offsets to manage our carbon tax liability, and we are going to use these same offsets to count towards our emissions target. Offsets provide flexibility for hard-to-abate residuals. So put it all together, and the result is the roadmap is now a catalyst for growth. This is a breakthrough in aligning our environmental and business goals. Lower capital, higher returns, allowing us to reduce our debt and accelerate growth. Full gasifier utilization keeps Secunda generating strong cash flows deep into the future. And importantly, we've planted the seed for a new integrated power business with scalable, standalone economics. Now, to date, we've already made tangible progress. We are seeing the benefits of our energy efficiency projects, and this allowed us to turn down our first boiler equivalent in Secunda earlier this year. We've also decommissioned all our on-site incinerators in Sasolburg and Secunda and recycled most of our waste streams. Renewable energy is already starting to flow into our facilities. So in short, Sasol's optimized roadmap does more than just cut emissions. It offers economic value and strategic optionality. Now, this is the kind of innovation that's in our DNA. And investors can expect more as we respond to changes and opportunities in the external environment. So now that you've seen how we anchor our transformation in value, let me bring this renewable power story to life. Secunda alone consumes well over 1 gigawatt of electricity. So every electron from our solar panels or wind turbines has an immediate home. Every megawatt of renewables drives our break-even down and lowers our emissions. Now, initially, we limited our ambition to 1.2 gigawatts to avoid spilling risks. But shifts in the regulatory environment now allow us to sell excess electricity. And therefore, we've lifted our renewable energy target to up to 2 gigawatts. At that level, we extend the clean power window and earn returns that comfortably clear our hurdle rate on substitution savings alone. The opportunity to trade excess electrons allows us to expand our position in the market. And to achieve this, last month we applied for our own standalone trading license. Some of you may have seen, last week, we partnered with Discovery Green to launch Amply Energy, an innovative pay-as-you-go product. And this product is already oversubscribed, giving us an indication of the significant demand. Now, once those first 2 gigawatts are running, it's that same anchor demand that lets us move stepwise beyond 2 gigawatts. Extra capacity further extends the clean power window, and we can sell any surplus into the market. Now, you may ask, so what happens if the South African grid ever finds itself awash with midday electrons? Well, we enjoy a release valve that no pure-play generator has. We have the opportunity to convert this excess electricity into hydrogen, allowing our Fischer-Tropsch units to convert electrons into high-value fuels and chemicals, putting a floor under returns. And in this market, we're uniquely positioned to succeed. Sasol already operates the country's largest private fleet of coal and gas-fired electricity generation. So buying, selling, and balancing electricity is business as usual for us. We also have access to extensive land, ideal for embedded generation, that then bypasses current grid bottlenecks. So in short, we start with guaranteed demand. We unlock immediate savings, we learn at scale, and retain the unique ability to turn electrons into premium molecules. It's a clear, low-risk route to becoming a top-tier power player, while strengthening Sasol's earnings and resilience every step of the way. Now, our renewable energy strategy is already deep in execution, and we followed a two-pronged approach. First, we secured low-cost power purchase agreements for shovel-ready projects, and this allowed us to decarbonize quickly and lock in immediate savings. Second, we use the breathing room that these PPAs have created to pivot into equity stakes and trading positions for added value. Now, our projects that are coming online, we have 757 megawatts that will ramp up over the next 18 months, with a further 1 gigawatt that we aim to contract by financial year 2028. Now, this first wave of PPAs will cumulatively, over the next 5 years, save more than 4 billion rands in costs alone and reduce over 10 million tons of greenhouse gas emissions. Now, these are benefits that drop straight to the bottom line and count towards our 30% emissions target. Now, we are applying the same start small, scale fast logic to embedded generation. A 3 megawatt solar array in Sasolburg has proven the concept of building inside our fence and bypassing grid access delays. And we are now rolling out this template across our land portfolio, site by site. With these successes, we are moving from pure offtake to selective equity, allowing us to capture developer margins as well as trading upside. We are avoiding overexposure on one mega project and instead are stacking a series of smaller, high-confidence projects, each one lowering our cost base and ratcheting up our capabilities. The savings and carbon reductions already being realized from renewable energy prove that our strategy is effective and profitable. Now let me turn to gas. Here, gas plays a pivotal role for both Sasol and South Africa. It is critical for our customers and it enables the transformation of the South African grid. And we see our gas value chain continuing as a standalone, profitable business. As gas from southern Mozambique declines, we bridge this with near-field extensions. Simon spoke about methane-rich gas, and ultimately, an LNG solution. As gas demand in the country grows, we see an opportunity to protect and grow our income from our mid and downstream business. Now, we believe that LNG remains the only viable alternative to meet the country's medium-term needs. And here, we are collaborating with Eskom to accelerate the development of a gas-to-power solution that provides the anchor demand to aggregate LNG. With LNG solutions unlikely to be available before 2030, it is critical to bridge the supply gap for our customers. And here, Sasol has developed a unique solution to redirect methane-rich gas from our Secunda operations. This mitigates customer uncertainty regarding the timing of LNG. Our pricing application will support us being compensated for the loss in high-value products. Now, unlocking the next phase in South Africa's gas economy is highly complex. And here, Sasol is uniquely positioned to support the country's gas ambition. Let's shift gears now towards sustainable feedstocks and products. This is a rapidly expanding market with multiple opportunities emerging across various industries. And here our approach is to focus on areas where there's an immediate demand: renewable diesel and sustainable aviation fuel. Renewable diesel provides a seamless alternative to fossil diesel in heavy vehicles, and we expect this market to grow by up to 500 million litres annually by 2030 in South Africa. Success in this area will depend on the ability to access low-cost feedstocks, convert these feedstocks into products, and place them competitively into the market. And here, we're making good progress. In collaboration with Anglo American and De Beers, we are converting degraded mining land into high oil-yielding crop hubs. This initiative, when combined with our Natref refinery and our established diesel customer base, provides us with a significant competitive advantage. In the aviation sector, mandates such as those in the European Union are driving viable demand for sustainable aviation fuel. And here we are well positioned to participate. Our Zafra joint venture with Topsoe leverages our globally recognized technologies to facilitate the competitive production of sustainable aviation fuel. Notably, Sasol and Topsoe's technology has been selected for the German Aerospace Power Center's Power-to-Liquids platform. We are also gearing up to produce commercial-scale SAF in South Africa, supported by EU backing to ensure sustainable production in Secunda. So as an investor, what can you expect? In this decade, you can expect growing income from two new value streams. First, from the power business, and secondly, from our sustainable fuels business. In addition to these new ventures, we are focused on protecting our gas income and are executing comprehensive plans to secure the country's gas future. Finally, we have a funnel of emerging opportunities that are at an earlier stage of development. And here, we are advancing these in line with our principles of being market-led and value-focused. Now let's get to the burning question. Based on what you've heard today, I'm sure you're asking, is there still a strong South African business for Sasol way beyond 2030? Everything that you've heard today points towards an unequivocal yes. Our feedstock security is solid, with own mine and contracted coal supporting full gasifier rates into the 2040s. Regional demand for liquid fuels and chemicals extends beyond 2040, ensuring continued cash generation. Current initiatives protect income from the gas value chain. We are lowering our Southern African oil price break-even, ensuring healthy margins even in conservative scenarios. The optimized ERR turns decarbonatisation into value creation, allowing us to meet our emissions target while enhancing Secunda's value. Secunda remains cash positive even as throughput drops below 7 million tonnes when gas declines. We will keep our gasifiers fully loaded, replace expensive coal power with low-cost renewables, shift to sustainable fuels and chemicals, and right-size the cost and capital base. In addition, we will grow new income from new sustainable businesses. These steps transform our assets, offset the gas shortfall, and protect and grow our profitability. Now, externally, policies are also fast shifting from headwinds to tailwinds. Treasury has extended the carbon tax allowances and raised the offset cap, flattening the cost curve. We are also advancing a carbon tax recycle concept to reinvest the tax in our transition. So put it all together, and the future is compelling. The business is evolving into a cash-generating, lower carbon platform with multiple new value streams and reduced oil price exposure. I'll now hand over to Simon. Thank you very much.